What's up, kabayan? If you're a new investor and want to make more money, welcome. In this video, we're going to talk about how to make more money by avoiding 5 dividend investing mistakes. And we're also going to look at 3 stocks that generates the highest dividend income on my portfolio. Hi, my name is Ron, and welcome to Pinoy Stock Investors, where we help our kabayan start their investing journey. Before everything else, this is not a financial advice. Please do your own research and consult your own financial advisor before investing your money. Without further ado, here are the 5 mistakes that we want to avoid. Number 5, avoid chasing yields. It's better to invest in a high quality stock that pays 1% to 3% yield over a stock that pays 7% or more but is risky. When people start investing in dividend stocks, they automatically gravitate to a high yield stock. But depending on the industry, a high yield stock can just as often be a sign of trouble as a sign of big profits. Don't let yield blind you to a company's growth prospect. Most of the time, companies with lower than average dividend that is currently experiencing solid growth and constantly increasing their dividend is a better choice than a company with a larger yield but is not growing. Number 4, stop over-diversification.
But Ron, they said diversify, diversify, diversify.
There's no exact number that distinguishes an adequately diversified portfolio from an over-diversified one. As a general rule of thumb, you should at least be invested across different market sectors. One risk of over-diversification is that it takes an investor's focus away from highest conviction ideas. Instead of maximizing your earnings, you're pulling away resources and putting them on a lower conviction one, decreasing your profit and your investment growth. Investing in multiple ETF with high overlap is also an over-diversification. To avoid over-diversification, one way is to establish a core position on your portfolio. Keep the number of companies to a manageable size and make sure that if you own multiple ETFs, you have a minimal overlap. One growth ETF like VTI, VOO, or SPY, and one income ETF like SCHD, SPHD, or VYM should be enough together with your core holdings. Again, this is not financial advice. The third mistake is expecting to buy and sell shares just for their dividends. Wouldn't it be great if I could just buy the stock before they pay the dividends and sell the stock after they pay the dividends?
That's great. Why didn't I think of that?
Genius! On the surface, this strategy seems like a good way to beat the market. Unfortunately, this clever trick doesn't work. You may be able to collect the dividend, but when you try to sell the stock, you'll be disappointed. Majority of the time, the share price go down to reflect the dividend payout. If you try to sell the stock immediately after the dividend payment date, you're pretty much break even. Number 2, not looking at the company track record. Historical data does not guarantee future results. We kababayan need to know how the company is performing to see if they have the historical data that they are doing their best to be profitable. Looking at the big picture to see if the company consistently increased their revenue, consistently increased their sales, managing their cash flow well, and consistently increasing their dividends for us dividend investors. Before we go to number 1, if you're getting value and we're able to avoid 4 mistakes, hit the like button and make it turn blue. You can also subscribe for free to get more videos like this. And for number 1, not reinvesting the dividends. Yes, a lot of beginner investors withdraw their dividends. It's all good and all, no one's stopping them to do it. After all, it's their money, but they are seriously missing out on future returns. Smart investors know that to give any investment strategy the best chance of success and most income, you need to consistently increase your position or investment. If you can reinvest your dividends 100% of the time, it will give your investment a boost, increasing the next dividend that you will receive. With that, I hope that you can avoid these 5 mistakes and increase the return on your investments. So for the viewers that are still watching, here are the 3 stocks that generated the highest dividend income on my portfolio in 3 different sectors. On the 3rd spot, it's Coca-Cola, ticker symbol KO. Every 3 months, I receive $11.41 from Coca-Cola. Combining it all together, annually I receive $45.62. Coca-Cola is a matured company and a consumer staple. A matured company doesn't grow as fast as a hyper-growth company, but they sure are consistent with their dividends. On the second spot, it's ABBV, ABBV ABV. On the second spot, it's ABBV ABV. Quarterly, I received $22.42, and combining it all together, annually I received $89.69. AbbVie is a biotech company that puts them under the healthcare sector. With 4.22% yield, they are considered as a high yield company.
But Ron, I thought you said don't chase yield.
Well, yes, it does have a high yield, but the payout ratio of this company is 44.52%. 44.52%, meaning that they have enough cash to pay for their dividends. And based on their historical record, they've been increasing their dividends consecutively for 8 years. And on our top spot, it's Realty Income, ticker symbol O. Monthly, I received $8.04. Yes, monthly. Combining it all together, annually I received $96.49. Yes, Realty Income pays monthly, and they are a REIT, which is one form for us kababayan to invest in real estate and become landlords. After receiving these dividends, I reinvest them back on my portfolio, not necessarily investing on the same company, but investing them in my core and high conviction companies. By the way, these 3 companies are part of my core holdings. So what's our takeaway in this? First, sustainable dividends will provide a long-term return. Second, investing in high-quality companies will provide consistent dividends. Third, reinvesting your dividends will snowball the growth of your portfolio faster. So kababayan, do you have any tips that you want to share? Drop it in the comments if you have any topic that you want me to cover. Lastly, we're on the road to 200 subscribers, and I'd like to thank you for supporting this channel. If you have any questions about investing, drop it down in the comments and I'll make sure to answer them as much as I can. That's one way I can show my appreciation to you. If you get value in this video, hit the like button. Subscribe to my channel to get updates on my future videos. It's free and it will definitely help my channel. Let me know what you think down below in the comments. I hope you guys like this video and see you in the next one. Peace. Do you have any tips that you want to So kababayan, share in the comments. You can share your top. You can share your top 3 holdings in the comments. Do you have any tips? You also have any tips that you want to share? Drop it in the comments if you wanna. Drop it in the comments if you wanna. Drop it in the comments if you have any topic that you want me to cover. Drop it in the comments if you have any topic.